The world reserve currency issuer is destined to have really catastrophic problems. It doesn't matter who you are or where you are, it's a function of policy and how the system is designed. And so very naturally, reserve assets are going to become appealing at a rapid rate. And so I think it makes all the sense in the world that the United States has stumbled into the position they're in now, which is, hey, this world reserve currency status thing, this sucks. And this Bitcoin thing's pretty cool. Bitcoin doesn't need you, you need Bitcoin. The first step of adopting Bitcoin is humbling yourself, and you are not the main character.
We're witnessing what Mallers calls a monetary regime change. The macroeconomic landscape is undergoing seismic shifts, and the Biden administration's soft pivot towards supporting Bitcoin is intriguing, especially as the U.S. stumbles deeper into trade wars, rising debt, and the unraveling of its financial dominance.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I don't think anyone owns Bitcoin because of what someone in the White House is tweeting, right? If I own Bitcoin because of what a president said or didn't say, then I'd be poor. So I mean, we all own it because it's apolitical. It's been successful no matter what a government has done or not done for it. But I do think what is bipartisan is we're living through probably the most fascinating macroeconomic time of our era. I think we're living through a monetary regime change. I'd be shocked if the dollar, the current iteration of the dollar as the world reserve currency, were to remain. So I do find this administration's support for Bitcoin to be very interestingly timed. And then now we're in trade wars and what's going on with China. I think it is as cool a time to be working on Bitcoin as I've ever seen in my 13 years. Bitcoin doesn't need you, you need Bitcoin. The first step of adopting Bitcoin is humbling yourself, and you are not the main character. That was my advice to El Salvador. That's my advice to anyone that cares to listen, is that this thing is bigger than all of us, which I think is one of the most important parts of having a neutral reserve asset. I mean, money is our time and our energy in an abstracted form. It's the market good that we all exchange our effort and our labor and our work for to then go out and get the things that we want in life. And so to have that be a neutral asset that no one is bigger than is critically important. So I think Larry Fink has realized, I'm not bigger than this thing. The ego has reduced, and he's just become a part of it and contributed to it. And I think it's paying dividends. It is its most successful product ever. So that's the Bitcoin story: is you think you're smarter than it, you think you're bigger than it, you think you're more successful than it, and then you realize you're not. And it's in your best interest to just be a part of it. And then you live the best version of yourself thereafter. So congrats to Mr. Fink. Welcome to the show. The world reserve currency issuer is destined to have really catastrophic problems. It doesn't matter who you are or where you are, it's a function of policy and how the system is designed. And so very naturally, reserve assets are going to become appealing at a rapid rate. And so I think it makes all the sense in the world that the United States has stumbled into the position they're in now, which is, hey, this world reserve currency status thing, this sucks. And this Bitcoin thing's pretty cool. You've got the Treasury, the Secretary coming out on CNN and saying real negative rates for the 10-year.
Yeah, that's crazy.
He's saying, I'm going to focus on the GDP growth faster than the debt. It's like, wait, what? You out of your mind? Then yields the next day go skyrocket. And it's so, okay. Fixed income, 10-year, dead, right? They're talking about privatizing Fannie Mae, Freddie Mac to buy MBS and provide liquidity that way. Then you've got capital controls. So all the trillions of dollars of trade surplus from foreign trading partners, they're saying no more bidding up the NASDAQ, no more bidding up the Mag 7. Goodbye, your 50 times, all your favorite tech companies that are trading at 50 times earnings irrationally, well, those got to come down because you're not getting a persistent bid from China anymore. All of these amazing, beautiful penthouses that are selling for hundreds of millions of dollars, well, you don't have the foreign, Russian, and Chinese capital anymore. All the beautiful farmland that isn't actually producing food, well, those aren't getting bid up anymore. So you're having assets, the dollar is artificially strong. Dollar assets are artificially strong because of the world reserve currency status. And so if we're going to start to balance that, then fixed income, then the equities market, they need real returns. They need a real balance sheet. They need real growth. Well, Bitcoin's compounding at 60% a year. And if you add a little bit of leverage to it and you add cash flow generating products and you add a little bit of tether and a little bit of strike, that's a very powerful equity in a world that's reorchestrating capital flows. As Bitcoiners, we're like, wow, this is unbelievably exciting. Also, by the way, Bitcoin inspires the most clever, creative thinking I've ever seen because I do think it's the most free market of all time. There is no central rule maker or intermediary or governor or regulator that gets in your way of ideas. And so this idea was so clever and so brilliant, and we're just cheering them on. If you buy Bitcoin and you become a Bitcoiner, it's an open network. You're all of a sudden on Michael Saylor's team. You're on Larry Fink's team. You're on Jack Dorsey's team. Now you're on President Trump's team. And El Salvador got that early, and they understood lean into the network effects and the economy scale of an open network that is all empowering to all of us that buy into it. And it's paid dividends. I mean, I think their Bitcoin treasury is almost worth $1 billion. They've been able to renegotiate deals with the IMF they would have never in a million years. I mean, their credit rating has just gone up and up. I mean, Moody's just downgraded the US. They might be more credit worthy than us. So I couldn't be more proud of them re-engineering their story. And I think it goes to show just how inclusive and empowering Bitcoin is. I mean, name me another technology that could empower in 180 an emerging market that was devastated after a civil war like that. I mean, they all had access to iPhones, they've had access to television, the radio. Nothing could have done that except Bitcoin, in my opinion. So I'm proud of them and I'm thankful for their contribution to the story.
Perhaps most compelling is Maller's vision of America's future with Bitcoin. He believes Bitcoin is inherently American. The U.S. led the internet revolution, built the world's most successful tech companies, and championed open communication and property rights. Bitcoin, he argues, is the next frontier of those same ideals, but America's debt is piling up, and the world reserve status is starting to hurt. Maller sees Bitcoin as the solution to this Triffin dilemma, the catch-22 of needing to print dollars for global liquidity while trying to maintain domestic stability.
I think what made El Salvador unique is at the time they didn't have their own currency. So what people don't understand about El Salvador, at least widely, is they went through a devastating civil war, lost their own currency. And so again, if money is not only just a piece of paper that you use to get pizza, but it is your life's contribution stored in a market good for you to either save or exchange later. It is a representation of your work, your effort, your labor, who you are, your life's work. And so for people that have the luxury to print that, forgiving that luxury is something that no central bank or government is interested in doing. So El Salvador was unique in that they could not print their own money. They were using the US dollar. They were looking for new life, a way to build a better future. And Bitcoin was a bit more natural because they didn't have to forgive the superpower of printing time and energy. Argentina, going through austerity, all sorts of terrible times, but they get to print money. They get to print money and they get to use the military and force and jail time and the courts and judicial system to force you to use it. And that is a superpower. Yeah. And so I've actually thought, I kid you not, after El Salvador, to me what made most sense was eventually America, because America is prided on being technologically forward. I mean, what we did with the internet was astounding and pioneered open communication globally. All of the internet powerhouses were founded in the United States. Leader of democracy, leader of property rights, leader of the free world. Bitcoin felt right for us. Now also we're the world reserve currency issuer, which means we have the most debt, which means we run the most fiscal deficits, which means naturally we're going to start to have an interest in not being the world reserve currency and to owning and stockpiling and eventually transitioning into some world reserve asset status. And so it made a lot of sense to me. I felt Bitcoin was very American and that it is inevitably going to solve our problem of like this Triffin's dilemma that is compounding right in our face. You need Bitcoin. Bitcoin doesn't need you. And you look in the mirror and you realize I'm better off as an individual, as a family, as a business, as a country with a harder money. I think society has a direct correlation to the hardness of its money. Hardness is, by the way, it's a direct reference in how hard is it to produce more. When you have a hard money that's bound to the physical constraints of Mother Nature, it allows you to prioritize the future, lower your time preference, to coordinate effectively and efficiently. in a free marketplace. And so everyone is better off with Bitcoin in their life because Bitcoin is the hardest money we've ever conceived of. So again, I know people love to get all wound up and, oh, I'm Treasury. Yeah, it's very logical that every company naturally has capital to store, and they're gonna store it in the, most, Sailor loves thermodynamic, but it's bound to the physical realities of the universe. You physically cannot make any more of it, which makes it the safest place for me to store my work. So it doesn't surprise me whatsoever. I think at 21, one of the reasons I co-founded it with Tether. I've known these guys forever. We've been in Bitcoin for both of us a long time, way over 10 years. This isn't a pivot from some other operating business. We didn't get into Bitcoin recently. This isn't anything to do with the White House or the administration. These are Bitcoiners that thought there was not a hole in the market, but we thought Bitcoin could be represented in a way that we were interested in, and we saw demand from folks like SoftBank. And so we think we're very different, which I can explain, but it doesn't surprise me that the capital markets has a big appetite for Bitcoin. I would say maybe 1 to 2 years ago, the amount of institutional demand has far exceeded, I think, any Bitcoin. I mean, these ETFs and this administration and the amount of demand in the capital markets, and especially now we're seeing whether it's tariffs or capital controls, is this American First investment policy, which is, hey, China, take your money and go home. The $150 trillion market of global equities, like all these companies trading at 50 times earnings, people are trying to look for like real value, real returns, companies with a real balance sheet. And that level of demand, we were like, okay, a lot of these other treasury companies, there's nothing wrong with them, they're just a bit small. These are companies, small cap, mid-sized businesses that don't have the skeleton to actually absorb institutional demand and growth. And then for the MicroStrategies of the world, which there's only one, we thought there was an opportunity to actually build technology with access to the capital markets and access to such a big balance sheet filled with Bitcoin. And Paulo and I, before we were CEOs, we were technologists. Like we both were engineers. And so over the last few years, we were like, man, for the smaller companies that are doing maybe innovative, product building things, a SoftBank can't write them $1 billion check. This market cap's $100 million.
The discussion transitions into Maller's new venture, 21, a company co-founded with Tether to bridge Bitcoin and capital markets. He argues there's a huge demand for real assets and hard money in capital markets, and many Bitcoin companies are too small to satisfy the institutional appetite. We thought there was a hole in the market, he says, and 21 is his answer. As SoftBank, BlackRock, and global funds look for Bitcoin exposure, they need entities with the infrastructure to absorb massive checks. Please like and subscribe.